Well, good afternoon, investors. Welcome back to especially if you're returning, if you're new to this, welcome. My name is Mark Robertson. This is the September 16th edition of Bull Sessions. I'm joined here by my dear colleague and magnificent mathematician, Ken Kavula.
Hello, everybody. Glad to be here.
I left out a few M's.
You left out a few. Leave them all out from now on. Let's keep going.
All right. And we're here obviously continuing our hunt for the Red Rabbits. That's our adopted mascot for small companies, small, promising, fast-growing companies. And we basically run the gamut of all kinds of sources. We'll talk about those in a minute between now and Halloween when we pick our list. And I'm only going to say this quietly and once. We are 19% ahead of the market going into the last last 6 weeks. So that lead is now at risk, probably. All right. We're also joined here by our dear friend from Florida, Kim Butcher. Good afternoon, Kim.
Hello, everybody.
Did the rain stop down there yet?
I've had sunshine all day, and there's none in the forecast. This is unusual.
Well, Florida needed some rain, and it certainly was delivered.
Yeah.
Without a hurricane, and that's a good way.
It's always a blessing.
All right, and we're also joined by our resident air lease expert, Matt Spielman from Houston. Good afternoon, Matt.
Good afternoon, Mark. Good afternoon, everyone.
And you're probably very familiar with that Irish company also that's involved.
Well, it's a newly formed holding company. I forget who the financial backers are behind it, but yeah, it's not sold to AirCap or someone else. It's a new entity just to get them.
Okay, so we'll keep our eyes on that situation.
Matt, the first thing that went through my mind when I heard about an Irish company, is this a tax haven kind of a situation for Air Lease?
Oh, absolutely. They are all based there, and even Air Lease held its assets there. And okay. In fact, I used to walk by the not with my company's permanent position when I went there, but our temporary office. I walk right by the AirCap headquarters office every day to work. So they're not just all there. They're probably within about a mile of each other, just like it used to be in California. If you go back to my first Air Lease presentation.
Okay.
Very interesting. All right, so we are going to dig into our best small companies, and specifically we're going to use Morningstar to ferret Brown Small Company for Opportunities. And of course the cover slide is in honor of the hunt, and notice that the rabbit is on the opposite side of the way that the dogs are heading. So should be an interesting hunt that morning. We're going to spend a few minutes on simplicity and then take a look at Tide, send in some small company nominations, as did Betsy Wills. So we will visit those and just generally kick around a little bit here. Anything else, Ken?
No, I'm ready to get started, Mark.
All right. Here is the drill. Almost all of you are familiar with it. If you are a newcomer and if you're a returner, no investment recommendation whatsoever is intended. This is entirely about educational demonstration. We're big on demonstrations here where we take and attempt to share the lessons of the modern investment club movement. That said, you're on your own as far as making a decision about a particular investment or a tool related to supporting your investing efforts. If you would like copies of these slides, or if you have follow-up questions or suggestions for future topics or small company nominations, please send them to the 2 email addresses on your screen. We are a week out from the September roundtable, just as a placeholder. All right. Well, here is our weekly check-in on Portillo's, and I'm sad to say that the relish is almost gone. We're knee-deep in ketchup on the right, and I'm not comfortable with ketchup and hot dogs. So that's all I have to say about that. $6 a share is a bargain. There are a few of you out there that have reported that you're speculating that $6 might be a bottom. And for those of us holding $13 or $16 shares, I hope you're right.
Are they sitting in a pew praying that it's a bottom, Mark? Or
Well, yes, and that's a reference to the Pope, who happens to be from Chicago. And yes, it was his birthday. I think it was yesterday, actually. And Portillo's actually sent the Pope a chocolate cake, as shown there. So now you know. All right, so this week, first of all, I had a major moment in my portfolio. I have not sold any of my shoes or retired any of my shoes, but one of my shoe companies, Skechers, was taken private. I think by G3 Capital or somebody like that. So they actually are no longer publicly traded. And I know that some of you out there lament that, and Skechers was kind of good to a number of us. So, Ken, I still do have my my holy footwear.
well, when you told me that Skechers was no longer, I immediately thought you had burned your shoes. So
No, that would be my wife, and I do prevent her from doing that. All right, this is update week for Apple and a bunch of chip companies, and of course, everybody knows this, but Jerome Powell and the Fed will be making a decision this week. If they've made it already, I'm not aware of it, but I think it's probably supposed to happen Thursday or Friday.
No, it should be tomorrow.
Is it supposed to be tomorrow?
Yeah.
And people are expecting either a 0.25 or a 0.5 interest cut, and I would just say anything could happen at this point. So we'll see.
I think the first big decision was knowing who was going to attend. That was a last minute thing.
Really?
Well, there were the two. There was the nomination for the board member that resigned, that the Senate pulled the nuclear option to void the supermajority vote to get him through, and then there's the other governor that the appeals court denied the move to fire her last night.
Yeah, it sounds like a bit of turbulence, to put it mildly.
That sounds like it'd make good TV, maybe.
Yeah, it could be.
Just don't want it for real life.
Well, with that as a note, I think all of us here, anybody speak up if you disagree with this, but we think simplicity is a good thing. And Charlie agrees with us. And I think that keeping things as simple as possible while still being powerful and effective is a pretty good idea. And that's what we do strive to do. So here is actually reinforcing that. It's a quote from Mr. Munger. And we are working pretty closely, pretty diligently to increase our emphasis on Value Line as a data source at Manifest. We've had a few glitches and a few frustrating moments, and I was recently carefully pondering, and I was sober at the time, how little I actually use some of that analyst consensus stuff, which, if I had to characterize it, generally introduces large doses of optimism and, dare I say, volatility, Ken, into what we do.
It's very, very polite way of putting it, Mark. Okay.
Okay, so, got a little bit tired of it, and then our data provider actually stopped doing some essential functions, and they were not willing to restore it, so we are going to fix that. And you'll see things happen over the next several weeks. But I'm already impressed and excited about what is possible, working closer with Value Line on their things. And of course, the two tributes on the right just kind of pushed me over the edge. Basically coming back full circle to where we've been, into a much larger dose of simplicity. But I don't think we're giving up a darn thing when it comes to the power of the methods and techniques. So we'll see. But I'm pretty optimistic about it. Any other thoughts or questions on that, Ken?
I think the quotes speak for themselves, Mark.
All right. Here's a quick look. Just I know this is something that many of you out there in the community do like to keep track of. Value Line does do a YouTube session, although they have skipped a couple of months here recently. I hope they're not getting worn out and tired. Going back the last approximate 3 years, they've put together a monthly program called One Stock to Buy. If you go to YouTube and you simply search on Value Line and One Stock, you will find a bunch of links to these programs. They run approximately 40 to 45, maybe 60 minutes on some of the longer ones. But these are the actual companies that they go through and demonstrate some of their screeners. And these are the companies they have selected. We put a hard stop on these when they hit an RSI, a relative strength index of 80. So that's just simply to lock the positions down so we don't have too many to keep track of. And you can see the ones that have been locked out or locked in, however you want to think of it, as being shaded or highlighted on this chart. The one thing that we have pointed out, and I don't know, Ken, maybe I'll ask you, or I will come up with a way to actually demonstrate. Every time they buy stocks with very low single-digit growth forecasts, and you can see them up at the top up there. See that cluster of red? A lot of those are in alignment with those low growth rates. And I think you can make a strong case just looking at this chart from bottom to top that they're in better shape when they pick companies with higher growth rates. And we know this to be true in general. There's going to be exceptions, but just kind of a fun list to keep track of and watch it as they go. And 8% is not all that bad for an overall return over that time frame. Not great either, but it's not bad. And if they would stay away from some of those other ones that are biting them, they would do a lot better. All right, I'm moving on. I don't want to get in trouble with them. I like those guys. All right, speaking of Value Line, here's how we look at our characterization of the market. What do you think, Ken?
I think that the market is slightly overvalued, hence the number that is slightly under 9%, but it's not enough overvalued for me to worry too much. There's still a lot of stocks out there to find and to buy. That green bar remains right at the line of expected, that red bar, that red line, that curve remains right at the line of reasonable expectations. And I don't think too much has changed in the last, I'm going to say 3 or 4 months. I think these numbers have been fairly consistent. Value Line has been the one that has been moving towards the lower number pretty consistently, but doing it very, very slowly. That 35% now is one of the lowest ones we've seen probably in the last 6, maybe 9 months even.
Yeah, and the lowest one I could find going back is that low point that you can see right in here of approximately a 6% return at the bottom down there. So that was their most pessimistic time period. But,
and we shouldn't be surprised when we hear the markets that the index is hitting all-time highs. Last night at our investment club meeting, we were looking at our own portfolio and realized that about half or more of our stocks were up somewhere within 2% of their all-time highs or their 52-week highs. So the market is just moving along in a very exciting way at the moment, maybe a little bit overheated, but I don't think we're in anything like a bubble or anything like that. We're just moving. A lot of optimism at the moment.
Speaking of optimism, it is 100 days till Christmas. So guys, this is your public service announcement that you now have 3 months and 10 days to be ready for Christmas. My story, and I'm sticking to it. All right, here's our performance perspectives. Basically a 10-year trailing look at a number of companies. The 10 companies listed are the companies most widely followed by Manifest Investing subscribers It's also very consistent with companies near the top of the Better Investing Top 100. And
And for the first time since its inception, the Buttonwoods Bulls portfolio is not last on the list. So blow the horns and release the balloons, folks.
Yeah.
Okay.
If I was Kramer, we would have a sound effect for this, I'm sure. But I'm not. But yeah, you can see some pretty good returns from companies that are in many of our portfolios. And there's 6 very highly performing ones. You can actually throw Visa on there for a 7th, and heck, we're in a good mood. Home Depot. So 8 of the 10 have done pretty well, and somebody's got to handle the other end of the rule of 5, the companies that underperform our expectations, and Cognizant and CVS are providing that foundation. Although, as many people have pointed out to me, CVS is up, I believe, 80% since I sold it about a year ago.
I think we should look at that benchmark column real closely, Mark, because it's not too often that you find a 2-year period of time when the benchmark is over 20%. And we're approaching that 2-year portion of time right now with our Buttonwood. We started the portfolio on the end of January 24. We're not that far away from the end of January 26. And to have a market returning more than 20% during that time sets a daunting task in trying to beat the market by 5 points.
Absolutely. And we're happy for the recovery, but we just have to hope that it continues. And again, we recommend that anybody out there that's trying to convince friends and family that it makes sense to get out there and try to find a way. Investing with your friends and investing in better companies at better prices. That's what better investing is all about. And those companies up at the top, those numbers are huge over the long term. And we do point out that, again, there's nothing wrong with being an index investor, but there is a potentially incredible incremental return above that for owning good companies, better companies at better prices. And that's what you see materializing up at the top of that. And then we've got the demonstration portfolios. Again, we're a week out from the investing roundtable, but these are some pretty good numbers and achieved collectively by a group of friends, demonstrating that you can find better companies at better prices and do pretty well.
I think we need to roll out, Mark, every couple of months a yes, Virginia. There is a difference in 2 percentage points. That whole idea that just a couple of percent improvement in your return does significant improvement in the total of your nest egg. So we've had some slides like that, and I think every couple of months we need to roll them out again and remind people of that.
We probably should do that. And from time to time, the market does deal doses of humiliation, and we've got one today we're going to talk about a little bit. These guys, I love this company for what they've done with small company investing over the decades. But man, have they had a tough go of it over the last couple of years. And we're going to talk about them, and we're going to use them as the inspiration for diving in using Morningstar and finding some small company investing ideas. So Brown Small Company, the ticker symbol is right there. It's a mutual fund, Brown Company SIX, BCSIX. And it's the true small company fund. It's not a small cap fund. It's a small company fund. All right. Anything else here, sir?
No, but it's always a good chart to take a couple moments on, but let's continue now.
You know, Ken, I was just thinking this morning that some days the dawns are brighter than others.
Where'd that big blue arrow come from, Mark?
You know, I have no idea where that just kind of plopped on the page. I don't like to draw attention to myself, but I've been threatening this group for a while that this could happen, and that's all I'm going to say is that blue arrow is a good thing.
Well, I'm just going to remind everybody from positions 1 through 33 that he's the scorekeeper. Just keep that in mind, okay?
That, and I hear, speaking of Christmas, Mark's going to send Larry Ellison a present.
Yeah, I believe, well, I know that Oracle helped me a lot. It probably helped Paul more a lot. Probably helped Julie Meter. I'm not sure about that one, but Nikki probably. So yeah, that huge move in Oracle has helped a number of us.
Yeah. I just want to mention Daniel, and I'm going to take a stab at it. I think it's Freilich. If it's not Daniel, and if you're with us, you can tell me. But we have a new leader after Kay being at the top of the list for, maybe 5 or 6 weeks. Daniel has taken over first place now. And some significant movement in the top 10 for the first time in a long time. A shout out to Steve. Going from 14 to 4, that's a pretty big move up near the top of the list like that.
Yep, and the Bauer City Ladies and Broad Assets continue to lurk at the top. 2-3-time champions there.
Kay has indicated that it's a Tesla thing, Mark, okay?
Well, in that case, she's just revving the engine. That's a
well, either that or she's mentioning Daniel's portfolio. I'm not sure which.
Talking the Tesla trash. I love it. Good stuff. All right. The monkey, by the way, went back negative, Ken, on a relative return. So
that's too bad.
he's really hanging in there. All right. Here's just a quick look. We're not going to do any button wooding here today, but here is the current condition of the portfolio. It has been steadily improving with respect to its overall health. And we still are about 4 percentage points above the average, the median projected annual return at 8%. We're cooking away at about 12. Call this a 12 versus 8. And that's not a bad thing. And the growth rate, we'd like to see that climb a little higher, but that's also not terrible. We would love to find, perhaps, Ken, as we go through the best small companies, we may find a couple of them that meander onto this list here in the near future.
And we've already placed a couple of them on the list that have helped us immensely. I'm going to move that we change the name of the portfolio in 3 or 4 months if we don't fix a couple of things, because right now our stocks are feast or famine. They're either doing better than 50% appreciation or they're doing worse than 0. One of the two. So very little left in the middle.
Yeah, and some of those have been quite unpleasant when they came to roost. All right.
You're being reminded by Mr. Emmerich that Tesla doesn't have an engine, Mark. Okay?
Yeah, I figured that was coming from somewhere.
All right.
You can, however, buy a Dodge car that has a fake engine that makes fake engine noise on an electric vehicle. All right, so here's a chart we've been playing with and having a lot of fun with. Basically looking at the balance in the account, the projected future value in 5 years, which is what we're really trying to do, how we take care of that portfolio with respect to the return forecast, the average return forecast, and more importantly, and I don't know whether, Ken, you were asked this, that we add this about 2 months ago, and I guess you can take personal credit for turning things around just by giving us something to look at. That rate of return.
Just put gold dots on a graph. You don't got to even explain what they mean. Just stick them on there. It's going to help. All right.
Well, it really had the performance of the portfolio has done a major inflection. You can see it right here with the future balance and the current balance is actually inflecting up pretty good. So, who's to argue? We are now up to 8.4%, which again is trailing the market over that period of time, but it's certainly a whole lot better than what it was. And I think this graph has a lot of utility. We're going to have some fun with it. All right, so with that, let's go to our best small companies, our Red Rabbit friend, and we're going to spend today with Morningstar for the most part. Morningstar, and taking a look into a fund which has demonstrated a very good long-term track record, even though they've been tormented by some dismal short-term performance. So we'll do that, and then we've got some ideas being thrown on the pile from Ty Hughes and Betsy, as you can see down there on the lower right. We'll get Ty's picture in here next time around. Here's that Brown Capital Small Company Fund. Its track record over the last few decades. And it was by far, it still is a favorite, but by far one of my favorite places to turn to for the longest time. You can see that since this point in time right here, they have languished considerably and have actually dipped below the performance of the S&P 500 after being considerably ahead of that in 2021 or time frame. So again, it's they have suffered a bit over the last approximate 3 years. And here's a little bit of an idea of how much. I mean, the return for this particular fund is at about 1.7% over the last 3 years. Their peer group, other small company funds, was tracking at about 8.7. So they have lagged the group by quite a bit. And you can see that this is them down here, Brown Small Company. And you can see the other ones go into that flag of small cap. These are kind of interesting. In fact, I follow a lot of funds, guys, and this one was a new name to me. Buffalo has been one of the companies we have tracked, and I've never heard of Osterweiss either. So both of those are probably worth a little bit of attention from us. Did you have anything else on this one, Ken?
It's a stark slap in the face when you're looking at small cap funds or small company funds, and the diversity between them, the divergence in those numbers is dramatic, Mark.
Yeah.
We really need to focus in on those two higher achieving ones and see what we can learn from them.
Yep. So we will get there. Here's just some quick words. You can see that they have dropped down to a 1-star rating from Morningstar. These words are from Morningstar. The ratings are from Morningstar. They are still considered one of their better funds in terms of that bronze designation. But Keith Lee is one of the original Brown Capital people, and he thinks like we do. I had the privilege of spending time with him at one of the Morningstar conferences a few years ago, and we shared some thoughts on the Manifest Forum back then. And he is still there in place, and he is still in charge, but he's no longer the chief investment officer. Damien has taken that over, and they're basically scratching their heads a little bit, wondering, what else they need to do to attempt to restore the long-term legacy performance. And I don't know, Ken, have they called you to ask you for any advice yet or not?
No, I have not gotten a phone call yet, Mark, but I have gotten a lot of email from folks wondering if we tinker with the Buttonwood portfolio a little bit too much. And I'm answering those emails by saying that maybe in today's market, with the extreme volatility that occurs, we need to take more advantage of that volatility, and maybe that means you do a little bit more tinkering than we might have done 20 years ago. I'm still not a trader. I'm still not suggesting that we look at things on a daily or weekly basis, but I do think that a good solid review, maybe 2 or 3 times a year, and the willingness to make a sale instead of just hoping that it's going to turn around might be something that we have to train ourselves to do, which is kind of a new feeling for a lot of folks that have been very comfortable managing portfolios in one way. Maybe, with mega stocks and extreme volatility, maybe the market sentiment has changed enough that we have to just kind of gently nudge some of our skills in portfolio management and give them a little bit of a rethink.
Yeah, and I think we're going to look at a couple of slides which will suggest that perhaps Brown needs to have that type of soul searching also. Do they hang on to stuff for a little bit too long? We'll actually look at a few cases of that and just kind of scratch our heads a little bit. I'd also urge everybody to recognize, well, first of all, we threw a bunch of stocks at the Buttonwood and then basically shaped it into what it is today. And that was a process that took a little bit over a year. The other thing I would point out is when the market has been hot, it's actually time to take advantage of selling opportunities. I would dare to think that there could be years where we don't sell a single stock in something like Buttonwood if the market's behaving differently. So just
as much as I like the plus 20% returns coming from the market right now, Mark, I'm realistic to understand and to admit that the market has about a 10% average, and that means at some point there's going to be returns less than 10% to balance out some of this 20% returns we've been looking at.
Yeah.
So we have to be prepared for that. And I know this argument about paying capital gains is constantly on the minds of people with large holdings, but that's a problem you should be blowing up balloons about and having cake and ice cream and talking about in very exuberant language, rather than always constantly worrying about paying the tax man his due. Let's not let that become the overriding way that you manage a portfolio. It's just not going to serve you well in the long term.
We definitely want to understand just the facts and, what are the actual dollars involved. Well, I actually have hope here, Ken. First of all, I love that image of the rabbit I made. I think, when Morningstar drops this sentence on a fund like this, I think this could be an inverse Robertsonism. They're basically starting to question, has this lost its touch? It's no different than saying, well, has Warren Buffett lost his touch? Is he finally going to trail the market? Well, Fortune magazine has written that article 3 times over the last 30 years.
So this might be foretelling. We need to do the opposite then, right?
Yeah, this could actually be a harbinger. There's a word for you, a harbinger of good times ahead for Brown Capital. Let's hope so. Because they really are some great people, and they've done a great job. You can see they've been around since 1992. Their genesis was an investment club. Mr. Brown and his investment club basically became this. And one of the things we like to point out here is they do not lean on market cap as the size of a company. They have what I would call a hybrid or a dual definition of a combination of the sales totals and the growth rates that they expect from their companies. That's kind of detailed here, but it's more about growth than anything when it comes to the company. So
our friend Marie in the audience, Mark, makes a wonderful point that we should not be surprised that small companies have been having some difficulty in the last 18 months or so with the dramatic increase in the cost of capital, which really unduly influences how successful smaller companies are going to be. Many times they have a lot more need to borrow money, and if you're borrowing at extreme rates compared to where you were borrowing, that really affects your business model to a great degree. So she's making a wonderful point that the lowering the costs of capital, lowering interest rates should begin to provide a little bit of spark for these companies going forward.
Yeah, I'm going to quote that if I continue up the Groundhog Challenge list, because I have a fairly strong component of small and medium size in that portfolio. All right, here's a look at the top holdings of Brown Capital, small company fund, and they have been having a bunch of redemptions. Investors have been fleeing and selling their units, and that has led to trimming of a number of positions all the way to the top of the fund. And that's what you see with that share change column. Ken and I were talking before we got started. I think that's first quarter, the change in the holdings of those individual positions during the first quarter of 2025. So you can see that they have had to trim a bunch of things. Ken Janke used to always remark, as a fund manager, which he was, that, redemptions should be an opportunity to practice prudent portfolio management. And people who are really good at it should be able to handle the redemptions. They're a little bit extreme here, so they are definitely strapped in. But we see some interesting names that have been pretty good to us over the years, including Alarm.com, which came to the round table from Brown Capital. That's where the idea came from several years ago. And that's done pretty well. And I think this passes at least one version of the Kavula test here.
Yeah, I think one of the most interesting things that we talked about before we started the session today, Mark, was asking the question, just putting it out there about whether Brown Capital has maybe held on to some companies that are no longer poster children for small company. I mean, some of these large holdings have been around now in the fund for 10 or more years, and you wonder if a company is still small after being in the portfolio for 20 years, like Tyler, maybe you should be asking yourself, why is it still small? Maybe it's not an example of a small company anymore. I don't know Glaucus, for example, but there's another one that's been in Manhattan Associates for 24 years. I think we should just put it out there for thought, whether or not part of the issue with Brown Capital is that they've not kept their eye on the ball when it comes to, are we still focusing on small companies?
Yeah,
I think it's important to ask that question.
I think as they do their soul searching, I think they should be thinking about things as you've just suggested. At what point does having a high level of conviction cross over into being stubborn in not taking advantage of selling opportunities? And here in the next slide, you'll see that they've had a couple of companies here since the early 1990s. And, so is it a bit of a violation of portfolio management that they continue to hold these positions? I think on one hand, having that amount of conviction is really cool. Their portfolio turnover is only 11%. I think it'll be higher with the redemptions, but only 11%. And
and I think that the benchmarks for small company need to be clearly defined, whether they publish those benchmarks or not. I mean, we've tried to maintain a discipline with our choice in small companies of keeping them somewhere under $3 billion in sales and keeping their growth rates up at least into the double digits. And I know for a fact that some of these companies have kind of moved past that $3 billion, which it's not carved in stone, but it's a perfectly reasonable benchmark for a small company. And then on top of that, I know the growth rates on some of these companies have moved down into the 8s or 7s or even 6s. So I think that's one of the reasons they should be seriously looking at as they try to put together a portfolio that can begin again to compete with the S&P.
Yeah, and in their defense, we checked before the session, their average sales growth forecast is still at 13%. So they still are a pretty representative small company. What Ken is talking about is individual positions within the portfolio that probably should have some scrutiny. So let's keep drilling a little bit deeper. We are going through the Morningstar list of portfolio holdings. We're looking for stuff that they have recently added to the portfolio. And you see a few of them at the bottom there. Transmedics bought this year, during the first quarter of this year. They doubled their position size. That's what this 100 would suggest. So this Transmedics company is a company that might be worth, raking over the coals. And it's down about 23% over the last year. So maybe there is a bit of a buying opportunity Anything else on this page that gets your
Well,
attention?
there's 3 or 4 that I will be looking at seriously. Agilus has been in the portfolio for just, a year and a quarter, year and a half. SPS Commerce is one less than a year in the portfolio.
Ty's bringing that one.
UFPT is on my short list of what I think are the 5 best small companies. In fact, it's on my short list for presentation to the roundtable in a couple of weeks. So, or I guess it's next week, the roundtable is.
Yeah.
I do think there's some really good candidates on here to take a serious look at, and that have not been in the portfolio for all that long amount of time.
So Transmedics seems to fit that bill. Here's 2 more. Badger Meter, which we have talked about a little bit, and Red Violet, which I have no idea. That requires further study. And
Yeah,
I'm Duolingo, Ken.
I saw it on there. I didn't say anything about it, but I saw it on there. I really like the concept of going to that defined screen on the Better Investing website that talks about small companies. You only get 12 or 13 hits from it. I look at that maybe once every 2 or 3 weeks, and Badger Meter's probably been on that list now for the last 2 years. The problem with Badger Meter, as I see it, when I'm looking at a 15 or 16 stock portfolio instead of a 50 stock portfolio, is that I can't ever do an SSG for Badger Meter that shows a par value anything other than something around 9, 10, 11. And that's not enough par for me to place it in my portfolio most of the time.
Yeah, we'll see that as we run the check on it.
Yeah. So I'm very interested in this Red Violet mark. It's a completely new name to me. I have no idea what it does or anything about it. So absolutely, let's delve into that. And I've already brought Duolingo to your attention a couple of times now, and I've been seconded by some of our friends in our community with Duolingo right now.
Yep, it's definitely worth some look-see. I just have some concerns about the long-term PE on that one, which we will ultimately talk about. So those are some of the companies that come to our attention. Here's Red Violet. You can see it's under 100 million in sales. These 3 companies, recent additions to the Brown Capital Small Company Fund, all definitely meet the growth end of the spectrum. Maybe a little bit timid over here if there's any credence to that 4.3 at the end on value line, but you can see these are all decent numbers, and there's that 10% that Ken is talking about. Badger Meter is the visual that you see here, and you can see that they do not have a large amount of price or fundamentals fluctuation. So maybe that's a powerful virtue of and by itself, increasing profitability. Go ahead.
That
Ken.
quality rank of Red Violet makes it even more interesting, Marka. I tend not to look at stocks like Transmedics with a quality of 33, but I would definitely look at a very small company with a quality over 60. So
decent,
very interesting. Yeah.
So again, this is the screening aspect of this. This is not, we are literally just screening for opportunities to study more carefully, more closely. And here is, we're going to jump to that other fund just to see, well, what are they investing in? And, what have they bought recently? Because they are smoking the place with the returns that they've had over the last several years. And there's a number of community names on here. Another appearance by Transmedics. Ken, you were talking earlier about First Cash being here.
This stock, Mark, was a darling in the community of 10, 12, 13 years ago. It was known as First Cash Financial Services, FCFS, and we actually owned it in 2 clubs that I belonged to for quite a while, and it was quite profitable. It's basically a pawn shop chain when you get down to the basic business model. I haven't looked at it seriously now in a long time, but here it is being added to this very successful small cap growth fund and being added very recently as more than 1% of the holdings. So it goes back onto my, let's take a new look at it and see what's happening with it.
Yeah, and I get the question: is it too late to chase investments in infrastructure and construction stuff? Well, this is an infrastructure construction company, Mastech, and you can see that they bought it 5 years ago. They've had a pretty decent run. The last year at this company's been 72%. These guys make stuff associated with roofing and shingles, and they've only had this for a short amount of time. So all of these from here on down are relatively new purchases. And look at the construction and the infrastructure type names that you see. So,
You know, that would also, Mark, go along with where Buffett bought a lot of Lennar Homes. And so that's another area where people must be, it's kind of like you got two different areas that are thinking the same thing, that housing could continue to be big.
absolutely. So,
Well, Mark, when you look at the backlogs of a lot of these companies that are dealing in very mundane kind of things like Mastech or like Comfort Systems or like IES Holdings that are doing electrical or insulation, or they're doing heating and cooling, HVAC kind of stuff, their backlogs in these companies tend to be almost as large as the company's sales growth, the amount of sales in the most recent fiscal year. If you can have a backlog that pretty well sets your goals for the next year without you doing any new business, I think you're looking at a company that might be very interesting on a stock selection guide.
it's an interesting set of companies. I want to know more about the individuals running this actual fund, understand better what they've been doing, how long, and what and why, and all that kind of stuff. Here's a few more that just kind of capture the imagination. As Ken was saying before we got started, he didn't even know BlackBerry was still in business. Well, these guys are buying it. Celsius is on here. Notice that they have Ken's nuclear company, small modular reactor company, and they have Matt's Camping World. So there you go, Matt. They're singing your song.
Yeah, I've been out of Camping World for a while, but they're still there. I keep looking and wondering what's happening. They haven't done too badly through what's a difficult time in the recreation business. So, yeah.
Well, I always look at that share change column, Mark, and they're really doubling down on this Celsius Holdings, which is a competitor to Monster Beverage or to some of the other energy kind of drinks. Again, another company that I had kind of moved out of my consideration that I think I'm going to move right back in again and take a second look at it. I also would urge folks to take a look at Morningstar in general and find out what it takes to be rated a gold mutual fund. It's a lot more than just those stars that are next to it. And they have a pretty good description of what goes into being rated gold. That's not an easy thing for a mutual fund to get. So when it has it, it makes the fund very interesting, makes their holdings very interesting to look at.
Yeah. So this,
Ken, another recent investor in Celsius is Pepsi, which I'm sure rings or gets a lot of people excited, since Coke is a major holder in Monster, right? That I'm sure sets up the M&A arbitrage registers are ringing, or anticipating ringing.
absolutely. And for those of you wondering who's going to be buying drinks in Chicago, that is a return on Aklo for the last 1 year. So you know where the bar tab is going to be passed.
Yes, but it was bought entirely on price to hope, Mark. They had absolutely no earnings. They were only in business for less than 6 months when I bought the stock. Okay.
All right.
I've never seen a PE that low. Actually, I have. There was one. I actually saw it in SSG. It was return on capital. I forget what it was. The SSG literally said negative infinity.
Cool.
I think it's because they must have had zero revenue. It was kind of funny. It's back in there somewhere, but that is truly the lowest return I've seen. Negative.
Probably.
If I tell you the name of the chairman of ACLO, then it doesn't teach you anything, but I would urge you to go out and find out the people in charge of this company. It might give you a little bit of boost to do some research.
Yeah, sometimes price.
Oh, Ken, you're just going to put that out there and tease
I'm
us and not
certainly
tell us?
going to do that.
He is.
I'm not going to say a word.
He's handing out questions, not answers, and that's okay. That's part of what we do. Good
Assignments.
stuff. Something else, Matt?
No, I said he's handing out assignments.
Yeah, handing out assignments. Imagine that. All right, speaking of assignments, that is not me. That's Ty Hughes. And Ty is with us. Are you in a place where you can talk, Ty?
He's in the back room here, Mark.
Yeah.
And that photograph is actually the Register's Great Annual Bicycle Ride across Iowa. And there's a tradition of dipping the tires in the Missouri River when you start and Mississippi River when you finish. So that's the Mississippi River right there.
Very cool. Yeah, we used this during our small companies, I think, a year ago. So I think that's the case. So Ty, you want to give us a little background on what you were looking for and what you found here?
Yeah, you were asking for ideas, and so what I did to come up with this list using the My Stock Prospector and then the Better Investing screens, I did kind of a traditional small cap screen for companies that had good growth and good revenue growth, and then I followed that up with using the visual analysis. On both those tools, you can scroll through your list and look at the earnings and revenue and price bars and get an idea. So what's common to these 6 stocks is that they all have very consistent earnings and revenue growth. And I'm finding that's probably a more powerful grower of the value of a portfolio than the story stocks. I mean, sometimes you hit it lucky with a story stock and the stock price pops, but I think having consistent earnings and revenue growth is a real key metric. Just a couple of comments. I know we've talked about these stocks. Duolingo has a very high PE right now. It had explosive growth, but it's a very interesting stock. And I think Manifest even rates it, uses a very conservative PE ratio to come up with the growth on there. Because of it's in transition from explosive growth to high growth, it's a very volatile stock. Two of the companies have no debt. Badger Meter has no debt. That's a little bit of a single function company. They do water flow equipment measuring and helping municipalities manage water. So it's a very focused business, but they have no debt. But it also, as Ken points out, they're probably right now don't have a terribly exciting par. And then the other company with no debt is SPS Commerce doesn't have any debt. Duolingo has very small amount of debt. They're expanding. They were a language learning application, and they've expanded into multiple languages, and now they're also moving into other areas, teaching math, chess, and other things using the same kind of a technology that they had. It's a very interesting company. Camtech, I just point out, that derives a lot of its revenues from China. They make measuring equipment and quality control equipment for semiconductor manufacturing, but a big chunk of their revenue comes from China. The other thing that's common with these 6 companies is that the estimated revenue growth ranges from 18% to 35% and higher based on the analysts. So they're all projected to do well growth-wise.
Good stuff.
Anyway, so it's interesting. And I see you doubled on some of the list. I think you've picked up some of these on your analysis too.
Yeah, and that caught my attention.
I'm sorry, go on, Mark. Yeah, go on.
I was just going to say Innovative Solutions it's in our best small company portfolio. It's near the top of the candidates, and it shows up here. But go ahead, Ken.
Well, I've been asking Copilot, that's the Microsoft accompaniment to Windows 11. And there's a button for it even, and I find it easy to use. That's why I use it. But I've been asking Copilot every couple of weeks to give me a list of I ask for 5, but sometimes I ask for 10 what they consider the best small companies, and I give it some criteria that matches the kind of criteria. And what's very interesting is that the list varies week to week, even sometimes hour to hour if I ask the same question. But 3 of the companies that are on Ty's list continue to make the list almost on a regular basis. That's the, go back a slide, that's the ISSC, the UFPT, and the DUOL, Duolingo, Innovative Solutions and Support, and UFP Technologies. Those 3 are coming up from my AI chatbot, and I'm not doing any work in finding them. I'm just asking a simple prompt. So there's overlap between doing your homework and doing some research, and also I think you can get some good ideas as long as you treat the ideas coming from the AI engines, treat them as screening results, not as buys, but as screening results. I think there's a lot of different places to get some source material that we did not use last year or in any previous years.
Absolutely. All right, here's a quick look at 2 of those companies, just so you can see that Ty is latching on to, well, as up straight and parallel as you can expect at the smaller end of the spectrum. And these are pretty promising pictures that are worthy of a deeper dive. Camtech and Innovative Solutions. All right, and then we've got one last thing to close out. Ken, you're not the only one doing this. I think Betsy is with us. And Betsy is asking the same type of questions she forwarded on these AI results. This was done with, it says up at the top, ChatGPT. And is Betsy available to elucidate?
Betsy's with us today. Let me see if I can unmute her and ask for her comments, okay? Betsy, you're unmuted if you want to make some comments about your list here.
Oh, hi, everybody. Yeah, I had trouble getting unmuted there for a second. Yeah, literally, Mark, just as you said, I just asked the question, and it referred me to a Barron's article that I wasn't familiar with, but it's been a couple of weeks, and I can't remember what it was about now. But anyway, it came up with the names that are listed there. I think Ollie's is a name that most people have heard of or know from many years. I think we even had it for a while in the Rocky Mountain Chapter Model Club. Mm-hmm. But some of those other ones I certainly haven't heard of before. Madison Square Garden I hadn't heard of. I think that First Cash was the one, Ken, that you were talking about.
Yeah, there's that First Cash again, right? Yeah.
And then Q2, I'm not sure I've heard of that one. But anyway, I didn't really do any follow-up with it. There was a whole bunch of other stuff that was included then in the search, but I think it focused more on maybe small cap companies instead of just small companies. I don't remember, Mark, but
yeah. The one thing I think it also underscored was what Marie Frank referred to earlier, with if the cost of capital comes down, that you want to have a little more emphasis and attention to this area. So again, this is just offered up as a demonstration of what our people are doing with resources. Like you've heard Ken say pilot. Betsy likes ChatGPT for one of her sources, but you can ask it this type of question and generate some. Again, let me underscore, these are screening ideas. It's just the start of the process, and you need to do a much deeper dive. So here's where we're at. We'll close out today's session.
Mark, before you go off that slide, I just checked my notes to make sure that I was correct. Stride, that very first one on the list, almost every single article that talks about Duolingo mentions Stride as well. So it's a direct competitor of Duolingo, and
is it really
doing some of the same kind of things. Well, even the description says K-12 online learning. So,
right.
Yeah.
Interesting.
Very different philosophy of how you do it, but a competitor for those same dollars.
And this is
it would make an interesting. It would make an interesting comparison on the SSG compare screen between those two.
Yeah, compare the two. And by the way, this is a competitor to Bucky's, so we'll just cross that off.
Bucky's is not public, Mark. Keep
I
going.
know,
All right.
but still, it's a competitor. All right, I'm just teasing. Thank you, Betsy. Good stuff. All right, so here, what you are looking at here is a ranking of the companies that have been submitted. The companies that are currently on the list qualify to be considered for renewal. So the 20 companies that are currently on the list are on this list, and I've added the companies that have been mentioned by Ken or Ty or Betsy or a couple others. That guy from Houston insisted that where are they? That no VITL be on the list, and you can see they actually made it into the top 20. So
It had been promised days ago. It's recorded even. So.
So anyhow, there's Ty's Innovative Solutions. By the way, Ty came up with the #1 company 2 years ago with NAPCO. So he's got a track record here. And these are sorted by proof because a lot of times proof can be a more effective measure for an early stage company. Again, the PARs and proofs should be comparable. They should be close to each other. And you can see in general they are. So that we will use that because of the number of earlier stage companies that are involved in this process. But this is our work in progress. Again,
and Mark, we should point out that some of our best companies on the small company list, they're still small, and they're going to be considered. Technoglass just shines at me. It's been a wonderful investment for the last couple of years. Matt's Green Brick, another wonderful investment for the last couple of years. And they're sitting up near the top of the par value, at least on this list. So they have a really good chance of making the list yet again, maybe 3 years in a row or even more. So that number 4, I'm not sure about it, but the rest of the list is pretty decent.
Well, it's still small and it's promising, but I'm crossing these guys out, but not for the Bucky's reason. I'm crossing it out for this reason.
Yeah,
it's not going to.
When you're Walmart's gas station, you're not small.
Yeah, a little bit too big for this list, right?
Yeah.
I will say on number 19, the ticker's right. It is Vital Farms, not Vital Foods. Vital Foods is a co-packer. So the ticker's right.
I'll have to switch that. That's what YCharts gave me with the ticker, so I will.
Well, you know that.
I will fix that. All right.
I'm looking at that sales list, Mark, and the rest of the list looks like it's in pretty decent shape. I'm not sure if we're going to be able to force another mutual fund onto the small company list, but we need to take a real close look at what Nukes actually holds.
Yeah, I would say that's a contender for that 19th or 20th speculative position.
Besides ACLO and SMR, they hold a whole bunch of really huge companies as well in that mutual fund. So
some of the more nuclear-centered utilities are among those holdings.
Yeah,
that could be cool. And what is kind of interesting, and I'll just make this comment in passing, I like the company Duolingo. I am concerned after looking at when we basically discharge the analyst consensus stuff, some of that optimism goes away. And if you really think hard about, well, what is a reasonable PE for this company 5 years from now, it's probably not 60. And
I will agree with that. Yes.
And if you actually do analysis the way that we do, the way the value line does it, you end up more in the 20 to 25 range. It's less attractive under those conditions, obviously, but the story is strong. I don't question that a bit. All right, so we will continue down this path. And again, if you're out there and you spot a company, you can call me, email me, threaten me like Matt did, and we'll put it up on the board. All right. So with that, the book is out. Is today the 16th? It is the 16th.
Is it?
It's out today.
Okay.
So there you go. David Gardner's book is available out there, and we will be treating that in the near future. And then a week from today, we're going to spend an hour discussing the book on the lower left, Investing for a Successful Future. And we're going to basically use that to kick off what will probably be a quarterly discussion group, literally around the campfire, talking about, as you can see, the works of people like T. Rowe Price, Phil Fisher, Greenblatt could even come in there too, but people who have been renowned growth investors, some of them who would qualify for Matt Spielman's Investment Club of the Legends, which we probably will do more with here in the near future after we get a chance to think it through a little bit. But
I will relate a very short story, Mark, after looking at the graphic on this slide. About 30 years ago, the community theater in the Flint area put on the Charlie Brown musical and used coloring book pictures of the Schultz characters as part of their advertising. And about a week and a half before the show was going to be shown to the public, they got a very polite but very firm letter from the Schultz organization to cease and desist. That those were copyrighted materials and they were not to be used without permission. So I'm just waiting for you to get your letter now about Snoopy and the bird there. So we'll have to see. Okay.
Well, I will tell you and the audience that ChatGPT did it, so I'm going to blame them.
Okay. All right.
Yeah, I don't know if that's really Snoopy because he's got a second lobe on his head anyway. So
yeah, that's
I don't know who you're talking about.
That's not the tumor. But yeah, I am familiar with that type of a letter. Working for Better Investing magazine, we heard from people like Coca-Cola and Disney, and they were pretty fussy.
Yep.
About stuff. And it could happen here, but I do find it interesting that ChatGPT kicked it out in that format. That almost questions whether or not some of that intellectual property protection has gone by the wayside. I don't know, because there's a whole bunch of other stuff it will not use in an image for the very reasons you've talked about.
Or it hasn't been litigated yet, one of the two.
Exactly. It hasn't worked its way through the courts to have a standard either. It's where audio sharing was with Napster.
That's right.
Remember those?
I believe I heard that Perplexity got hammered just yesterday on something. So it happens. All right. So with that, here's your reminder that we do archive all of these sessions, the bull sessions and the roundtables, on YouTube. If you search for Manifest Investing when at youtube.com, you can find these individual sessions. And there's Johnny Carson's curtain just to close down the day for today.
I would just like to promote, Mark, that our roundtable is not on the last Tuesday of the month this month. There are 5 Tuesdays in September, and we're going to be on the 4th Tuesday. That's a week from today at 7 p.m. Eastern, with that 6 p.m. start for the campfire. And then I'd like to also announce that Mark and I will be speaking in Northeast Ohio. That's the Cleveland area. We'll be on the east side in the Mayfield Heights suburbs, and we'll be talking to the Northeast Ohio investors on Saturday morning, the 27th of September. If you're anywhere nearby, go to the Northeast Ohio website on the Better Investing website and find out the details about where exactly we'll be speaking. We'd love to meet you in person, and we'd love to share some stories with you.
All right. Any other closing comments? That being the case, get out there and find those wonderful small companies. I am finding as we do the data migration, we're going to be more updated than ever when it comes to this task. So I'm looking forward to that, Ken.
I'm extremely pleased that we're going to be able to refer to a data source that most of our community is very familiar with.
Good stuff. All right. Thanks, everybody. Take care.